So, if you've glanced at the crypto markets at all lately, you've seen a whole lot of green. Prices are just surging. And the big question everyone's asking is why? Well, today we're going to break down exactly what's fueling this rally. Welcome to The Explainer. All right, let's just jump right in with the number that really got everyone's attention, $95,500. I mean, that's the key level Bitcoin just blew right past, and it was a massive signal that something big was going on. But what was it? So, to get the full story, here's how we're going to tackle this. We'll start with a quick snapshot of where the market is. Then we'll get into the two big reasons why this is all happening. One is about the economy, the other is regulation. After that, we'll look at why this rally feels, I don't know, a little more cautious this time. And we'll wrap up with what we should all be watching for next. Okay, let's get right to it. First up, let's just set the scene and take a look at how strong this market move has really been. Yeah, I mean, the momentum on January 14th was just, you couldn't ignore it. And this wasn't just a Bitcoin story. Nope. You had Ethereum holding strong over 3,300 bucks, and the total crypto market cap, it was climbing toward a whopping $3.25 trillion. The whole ecosystem was feeling it. Okay, so that's the what. Now for the really interesting part, the why. And the first big reason, you might be surprised, actually has nothing to do with crypto itself. It's all about the wider economy, and one word in particular, inflation. Right, so the star of this show is the U.S. Consumer Price Index report. I know it's a mouthful, it's called the CPI. But all it really does is measure how fast the prices of everyday stuff are going up. And the takeaway here is they're slowing down. See that core CPI number? That's the one economists really watch, and it actually went down a bit. For the markets, that was a huge, huge green flag. Okay, but wait a second. Why on earth does a government report about, the price of gas and groceries have anything to do with crypto? Well, it's all about the domino effect it creates across the entire financial world. So here's the key connection. When inflation cools off, it gives the Federal Reserve, the U.S. central bank, the green light to start cutting interest rates. And when interest rates are low, money is cheap. That makes investors way more comfortable putting their cash into what we call risk assets. Think high-growth tech stocks and, yep, crypto. It's like a classic playbook. Lower rates have historically been jet fuel for markets like this. All right, so reason number one is a helping hand from the economy. But cheap money isn't everything. Investors also need to feel confident, to know what the rules are. And that brings us perfectly to the second big driver here, some really positive movement on the regulation side of things. Let me introduce you to the Clarity Act. It's a proposed bill in the U.S., and honestly, the name says it all. It's designed to bring some much-needed clarity to the crypto rulebook. And the really important part? It seems to have support from both sides of the aisle, which is a huge deal. It's a signal that maybe, just maybe, we're moving towards actual constructive rules. And this really breaks down what it's trying to fix. See, for years, it's been this messy tug of war between two big U.S. agencies, the SEC and the CFTC. Who's in charge of what. This act basically wants to draw a clear line in the sand. It would put most crypto under the CFTC's watch, which would finally help clear up the regulatory fog that's been hanging over everyone's heads. So why is this such a game changer? Because it would mean moving away from this whole regulation by enforcement thing, where you basically find out the rules only after someone gets sued. Instead, you'd have a clear, predictable playbook. And for the big players, the institutional investors with serious money, that is everything. It's the stable ground they've been waiting for to really get involved. So let's recap. We've got good news on the economy. We've got good news on regulation. That sounds like the perfect recipe for just a wild, euphoric party in the markets, right? Well, not so fast. The market's actually being kind of cautious, and this is where things get really, really interesting. If you pop the hood and look at the altcoin market, pretty much everything that isn't Bitcoin, you see a split personality. It's not one of those a rising tide lifts all boats situations at all. Instead, you've got specific winners, like privacy coins Monero and Dash, doing great. But then some of the other big dogs, like XRP, Dogecoin, and Cardano, are kind of lagging behind. This kind of selective performance is what traders call rotation. It just means investors aren't buying everything in sight. They're being smart, strategically moving their money around to find what they think are the best opportunities. It's a far cry from those crazy altcoin seasons we've seen before, where it felt like you could literally pick any coin and it would go up. And you know what really paints a picture of this cautious mood? The Crypto Fear and Greed Index. Look at it. It's sitting smack in the middle at neutral.
Now, if this were one of those insane bull runs from the past, that needle would be buried deep in extreme greed. The fact that it's just neutral tells you that this rally isn't being driven by wild, crazy hype.
So, what's the big takeaway here? It seems like this rally is being driven by careful, strategic buying, accumulation. It's not a frenzy fueled by a ton of leverage, people borrowing money to make huge bets. And honestly, that's a really healthy sign. It might just mean this rally has stronger legs and is less likely to just suddenly collapse. Okay, so we've got these two big positive forces pushing things up, but at the same time, this layer of caution is kind of holding things in check. So that brings us to the million-dollar question: what happens next? Let's break down the key things that everyone has their eyes on. Yeah, you can basically think of this as a checklist for the next few weeks and months. Number one, more inflation data. Everyone's going to be watching that. Number two, what does the Fed actually say and do about interest rates? Number three, does that Clarity Act keep making progress? And number four, a big one for the charts, can Bitcoin stay above that $95,000 level? So when you put all the pieces together, the best way to label what's happening right now is a macro relief rally. It's not that risk-on craziness where everyone just throws caution to the wind. It's more like the market taking a huge collective sigh of relief. Why? Because two of the biggest clouds hanging over it, crazy inflation and regulatory uncertainty, are finally starting to part. And so that leaves us with the one big question that's on everyone's mind. Is this a real turning point? The start of something sustainable? Or is this just a nice little break before the next big challenge comes along? I guess only time will tell. But those signals we just talked about, they're going to be our best guide. Thanks for tuning in to The Explainer.